Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Intel returns to profitability and gives an upbeat revenue forecast. Are the chip makers' comeback efforts working?
Plus, banks are preparing to launch a $38 billion debt offering to help fund data centers tied to Oracle. It's a record for AI infrastructure.
And Mistral CEO Arthur Mensch joins us on the company's release of a new platform to help enterprise clients make customizable AI tools.
An important private market conversation. We get back to the public markets to end this week. We are at a new record high. When you're looking at the S&P, when you're looking at the Nasdaq, we're up 2% over the course of the last 5 days. But a real tick higher on the day, Ed. The macro picture, the inflation, cooler than many had worried about. And indeed, that gives the Fed room to run when it comes to maybe some more cuts that the market had already been pricing in. We've got China, US, we've got plenty to be digesting, and you're looking at earnings.
Yeah, in the earnings context, Intel's post-earnings rally has basically completely faded. A gain of more than 7% is now less than 1%. But profitable for the first time in a long time on a net income basis. The PC market was better than they expected. They're making some progress in server, even a little bit in foundry. The issue is that the quarter was all about getting money from anyone they could, clearing some of the debt, and there's still a lot of unknowns about how far there's left to go on this turnaround plan. Karen?
Yeah, let's get about where some of the holes are still left on Intel. Kunjan Sabani is with us, Bloomberg Intelligence Senior Analyst covering semiconductors. And we are still left with a lot to chew on because clearly PC doing a bit better, maybe even CPUs getting into those data centers. But what about the next iteration of fabrication of chips?
Yeah, this result shows the first sign in the right direction, sort of a turnaround, a beginning of a turnaround. The gross margin headwinds, like you said, the challenges are not gone away. But what they showed yesterday, where they are running, their demand is running ahead of the supply, which it will be for the first half 26. There were structural gross margin improvements, though we will not see a gross margin expansion next year, primarily due to the new 18A coming on, the exit from the Altera business, which was their highest gross margin business. But structurally, when you peel the onion, we like what they're doing. Most of the 18A will be moving from Oregon to Arizona, which is a better cost structure fab to begin with. A lot more volume will be coming back to Intel's foundries, which is better for them. As they go through the initial transition cost and the revenue scale, which it is showing from the higher demand in PC and data center, improves slowly, structurally, the overall gross margins should start to creep up.
I don't know what happened, Kunjan, but in the time you've been speaking, Intel's now flat and eliminated all of its gain of the day. I'm not saying that's your fault. I'm just making the observation. Look, when I spoke to the CFO, Dave Zinsner, on the phone, he was a bit surprised by some of the end markets that they're reliant on the product side. Servers in particular. The basic argument they're making is the hyperscalers have suddenly realized that you have to, at some point, update your CPUs. You have to invest in them. And so now they're saying that actually on a year-on-year basis, they'll see unit growth. What did you make of that?
That is a very credible story to believe in. We have seen signs of this in other markets. For example, the storage server market has been seeing a big demand when it comes to HDD. So when you think about every time when we are pinging something like a Copilot, it's going and clearing or analyzing data which was sitting dormant for the past 6 months. So the storage servers were not really using them. Suddenly now we are pinging them 4 to 5 times. So that does, it is a credible story to believe that the need for CPU, even outside AI servers, is going to increase now as we involve more and more AI in our workday.
Kunjan Sabani of Bloomberg Intelligence. Later in the show, we'll get more on Intel from the sell side. Meanwhile, banks are reportedly preparing a $38 billion debt offering for data centers tied to Oracle. Sources say the deal could launch as soon as Monday, with JPMorgan and MUFG among the lead banks. Here to discuss, Bloomberg Intelligence senior tech analyst Anurag Rana. There's a key point of clarification here that Caroline made to the team earlier in the chat, and it's not Oracle taking on this debt. It's Vantage, the developer, who will do the project. Even so, when you see a news piece like that about that level of debt supporting the build out in infrastructure, what is your reaction to it?
No, that's a very good point. And in fact, I had a very good conversation with our credit analyst, Rob Schiffman, and we discussed this quite a bit. We have seen something like this coming from other places as well, which is when you have a contract from a particular vendor, you can create, an asset-backed securitization product where the contract itself says there is revenue that's going to come in the future. So the question is whether they're going to be appetite for such large debt deals going forward as well, because I think that's critical for recognizing a lot of that RPO that's coming in into revenue. Otherwise, it's going to be very difficult to convert that into sales.
This is about yield. And for the facilities related to Vantage, they're expected to come due in about 4 years. There's about a 2 one-year extension options. You're getting 2.5 percentage points over benchmark, though. So people who are clamoring to get exposure to the AI narrative now don't just have to do it through equity. They can do it through debt, and they can do it at a nice yield. More broadly, are we going to see these sorts of packages come in this sort of sheer scale because of the need that we've got out there at the moment?
So you have to, because I think about it. If OpenAI has signed a deal worth $300 billion with Oracle, how are you going to finance that? How are you going to convert that contract into sales? And you need data centers to come there. You need equipment. And finally, that needs to be realized. So we are expecting a lot more in the market. The question is whether the private debt market has the ability to, basically absorb this level of debt or not.
Anurag Rana of Bloomberg Intelligence. We'll see how this does get absorbed. It's coming to the market as soon as Monday. But let's just talk more broadly about what's happening in the debt markets when it comes to tech, when it's happening in the equity markets, which are actually tech outperforming in that particular area today. You've got earnings, you've got hopes on the China-US trade talks. We've got stocks hitting a record after that CPI number came in with, a relief that the Fed will potentially keep on cutting at the rate the market thinks. Martin Norton's with us, Chief Investment Strategist at Empower. I want to go back to what we were just talking about and the debt that's coming to the market and the absorption that's going to be happening. I'm looking at a story right now saying that the Bank of England is actually probing data center lending because they're worried about AI bubbles brewing. Is this something you're starting to hear about in the market, Marta?
Well, it's so interesting because a lot of the rationale for the, complacency around the AI trade has been that this is largely being funded by very well capitalized, very strong hyperscalers, and the companies are not taking on debt. They are, using what they have to extend into this space. But now, in the most, recent month, we are beginning to see more debt issuance. And I think when you think about the scale of investment and the ratio of capex to revenue that we're seeing even at the hyperscalers, it does argue that we're going to have to use a broader range of financing to meet some of the targets that we have. And of course, that's the signal that folks are looking for, that there is an AI bubble. Now, I think there's a real difference between extreme valuations, which is where I think we are, and an AI bubble. I think the sentiment has to get more aggressive. I think we would have to see far more debt issuance. I think or kind of wildness around it.
We're getting a few hits to the line, Marta. We need more compute going. I'm interested in, look, $5 trillion is what the spending's likely to be up to 2030 if we're going to get the data center and compute necessary to fuel the AI viewpoint. To that end, when you're thinking about clients coming to you saying, I want exposure, I want it to be cross-asset, right, are you saying how are you talking about the diversification between equity exposure and debt exposure, corporate bonds and the like?
Well, at this point, the primary exposure to AI is still within the equity market. I think this is something that, especially for the active credit managers, it is an opportunity to vet. You can get that added yield as suggested, but I do think people want to be really cautious in terms of adding that debt. One thing that we're talking about a lot in the credit market is just how tight spreads are. And so that is what we want to watch to make sure that isn't, a valuation risk within the credit market.
Marta, earnings was a factor in this market this morning. When I came to my desk, we showed Intel actually is now basically flat. Even so, in the course of a conversation we had with Intel CFO Dave Zinsner, he made for an interesting case study, which is that he said they had been very cautious about tariffs, but the impact wasn't there in the end. And actually, in the PC segment on which they depend, shipments were very strong, stronger than they had anticipated. Just as a case study, that's really interesting data to me. What do you make of it?
I mean, it's totally interesting, and it really echoes what we've seen over the course of 2025, which is this sea change in trade policy, and yet really no discernible effect from either an earnings perspective or from an inflation perspective. Our emphasis over this period has been expecting to see some hit to earnings, less concern on the inflation front. And I think one thing that we're really learning over this process is that you can see a sea change in policy and yet not necessarily see the impact immediately. I think the concern I would raise to investors is just because you don't see an immediate impact doesn't mean there isn't an impact. When we look at the long-term implications of globalization on earnings, it has been a real positive for the US and globally. And so as we roll that back, it stands to reason that it is a headwind, maybe a headwind that we can overcome, but a headwind nevertheless.
Marta, please respond to what is one of the top news stories of the day. President Trump says he's halted trade talks with Canada because of an advertisement that they ran citing a Reagan-era comment. You're aware of it. In response, Mark Carney says that trade talks were making progress before the president's post on Truth Social. Again, as a case study of trade and policy in this market, your reaction to it?
Well, I guess I would say that trade talks are the toddler that just won't go to bed. I don't think this story is really over yet. I mean, we have a lot of certainty, I guess, in terms of the overall effective tariff rate, but the fine details of what those trade talks look like, yes, with Canada, but also, of course, there's still a lot of negotiation with China. So I think this is something that will be this kind of lingering volatility within the market.
Marta, you have a sea of parents of young children who are just feeling that pain, that analogy really beautifully. Thank you very much. Just, I want to go back to the very start of our conversation and to say that valuations you think are extended. Where exactly and what will earnings have to vindicate? Which types of companies?
Well, when we're looking at the US market broadly, really every sector from our vantage point, with one exception, is quite expensive. And when we talk about expensiveness, we're looking at sectors in deciles of valuation relative to their own history. And what we're seeing is valuations that are really in those 9th and 10th deciles. And that's when that starts to matter to prospective 3-year returns. When we look under the hood in technology, we really see it across industries. Now, that doesn't mean that these stocks can't grind higher. And if we do see upside surprise within earnings, potentially that could push the stock market even further. I think the idea here is that there's just low immunity. So if we were to get an earnings season that people expect, I think that's a lot harder to move the stock market. I will do a shout out to healthcare. This is something we've been surfacing since the summer. This is one of those areas that is more attractively priced. It has a lot of problems that it faces, but it also has, the potential to benefit from something like AI. So that's one of those areas that we're looking to in this environment.
Marta Norton, Chief Investment Strategist at Empower. Thank you very much. Aclara Resources, an exploration and mining services provider, plans to build a $277 million rare earths plant in Louisiana, the first of its type in the US. This comes as Western nations attempt to reduce reliance on China, currently the dominant supplier. The facility will process material from Aclara's clay deposits in Brazil and Chile for magnets used in EVs and wind turbines, and construction is expected to be completed by the end of 2027. Karen.
Now coming up, so much for pet rocks, hey? JPMorgan takes another big step into the crypto world. More on that next. This is Bloomberg Tech.
JPMorgan is set to allow clients to use Bitcoin and Ether as collateral for loans. That's according to sources. The move marks a deeper step into crypto for Wall Street. Bloomberg's digital finance reporter Emily Nicole broke the story, joins us now. I think it's really important to go through the mechanics of what we think this will work as, right? Institutional clients, what they can do as collateral, and then what the bank will do in return. Take it away.
Yeah, so what we've been hearing is that JPMorgan will be allowing this by the end of this year. What the process would look like is where institutional clients come to JPMorgan with holdings of Bitcoin and Ether that they already own. That would then be transferred to a third-party custodian that JPMorgan will appoint, who will look after the crypto so the bank doesn't have to touch it themselves, and that can be used as collateral for financing that the bank can lend against.
What's really interesting is the context of JPMorgan and, shall I say, Jamie Dimon's relationship with crypto, because it was a few years ago he was calling them pet rocks, hyped up fraud. And now, most recently in your story, which is a beautiful quote, talking about, I don't think we should smoke, but I defend your right to smoke. Is that why they're not going to be custodian while they're letting others like State Street, Bank of New York, Mellon, Fidelity still play that game rather than JPMorgan itself?
There's definitely a bit of a divide in terms of how banks want to touch crypto. Some, like JPMorgan, are happy for clients to touch it, but they don't necessarily want to be involved in touching it themselves. So earlier this summer, for example, this started out with JPMorgan allowing clients to use crypto ETFs as collateral. So traditional finance wrappers that they're used to touching, but it tracks the price of a cryptocurrency. This is a step further than that, but they're still not getting to the point of where they'd want to touch the crypto directly. It should be noted, though, it is pretty difficult for banks to touch crypto directly sometimes because there are rules like the Basel rules on banking that prevent them from touching crypto without having to hold an equivalent amount of capital in reserve at the same time. It can get pretty expensive unless you've got the right structures in place.
There's a lot of institutions and a lot of private individuals have a lot of crypto gains they want to be able to use as collateral. Emily, Nicole, it's a great story. Thank you. Coming up, Google says it's reached another new milestone in quantum technology. It's a step that could bring the long-promised power of quantum computing closer to reality. More on that next. This is Bloomberg Tech.
Google says it achieved a major milestone in quantum computing, bringing the technology's immense processing power a step closer to real-world use. The company says it ran an algorithm on its Willow quantum chip that is verifiable and 13,000 times faster than today's best supercomputers. Let's discuss with Karina Chow, Chief Operating Officer at Google Quantum AI. I think actually the best place to start is the basics of quantum computing versus accelerated or supercomputing. Because if you explain why that 13,000x performance is notable in simple terms, it gives some measure of why it's a piece of news this week.
Absolutely. Today's computers, classical computers, they use bits, right? Zeros and ones. They use that to calculate. It's useful for a number of different problems across the world. However, quantum computing is different, uses a combination of zeros and ones at the same time. That enables access to different types of problems, like the quantum echoes algorithm we announced this week.
You have brought Willow with you. You've put it in an impenetrable, safe housing encasing. There it is on the desk in front of me. I read a lot of academic papers this week, and many point out that you didn't use a scalable or fault-tolerant chip for this demo. And so the argument follows that it would be a big challenge for you to commercialize or scale out that technology. Is that a fair concern from the academic community?
That is the goal of quantum computing, to get to fault-tolerant quantum computing. Nobody is there yet. It is a long journey, but it is very exciting. We've been excited last December to announce for the first time that error correction can work. We demonstrated that with our Willow chip, and we continue on this journey, pushing the number of qubits and also bringing the errors way down.
And it's the timing now, Karina. What is it, 5 years till we get something that actually will show quantum computing being really applicable and useful in the areas of science, in the area of medicine? Why that timeline in particular?
Yeah, we are optimistic that we'll see real-world applications that are only possible on quantum computers in the next 5 years. This breakthrough that we announced this week is a great milestone towards that path. We showed that quantum echoes, this algorithm, is not only 13,000 times faster on a quantum chip, but that it can be used to simulate and calculate the exact structure of a molecule. So we think this is an important step on the path.
Someone on your team won the 2025 Nobel Prize in Physics, was among the winners. You have Hartman leading the charge. We have real stellar talent, but also a lot of investment. What did you make of the news, the flow that maybe the US government is there to support other smaller quantum players here in the United States? Is that important?
Yeah, we are really excited and pleased to see all of the investment, the support, the excitement about quantum computing across the board. The U.S. government has been a strong supporter and partner in this for the last many years, and we're very excited about those investments and continued partnership across the ecosystem.
Karina, you are the COO of the Quantum Group, right? And we reflected earlier in the week on the show when the headline hit the Bloomberg about this breakthrough. Actually, markets reacted. Alphabet shares moved markedly. Would you reflect a little bit on what the days that followed that were like? Did the phone ring off the hook from various parties that are interested now to know more about how they might be able to use the tech?
Yeah, for us at Google, we are really excited about all the interest that we're seeing across the board. Our mission at Google Quantum AI is to build quantum computing for otherwise unsolvable problems. I think that's why there's increasing interest with every breakthrough. People in other fields are getting excited about what can be possible, and we look forward to continuing.
So the bar has been set now for you. What is the next milestone that we should judge you by in progress?
Yeah, there's going to be continued work across the board. One really important marker of progress is continuing to push the hardware. So you can see on this Willow chip here, it says 105Q. That's 105 qubits on our Willow
Too
chip.
Fast. Give the cameraman a chance to catch up, but he will get it. Yeah.
All right.
Keep going.
Yes, 105 qubits. So that is great. This has been honestly cutting edge chip. But to get to where we want to go to solve these important problems in chemistry, in physics, in material science, batteries, energy, and more, we want to get to 1 million qubits. So we're going to keep pushing the performance of our system. We're also going to keep pushing the algorithm and software development so that we can solve these problems.
What does that take, Karina? What does that take in terms of supply chain? What does that take in terms of talent? What does that take in terms of focus?
Yeah, these are all really important questions. I'll start with talent. You mentioned a Nobel Prize winner on our team. We are super proud of Michel Devoret and the entire group of teammates and body of work that's happened over the last many decades. We're super proud of our team. We've got a super talented team of engineers, technicians, research scientists, program managers, and others who are pushing the boundaries of this technology. We've got to keep bringing the best and the brightest to our team to push the performance of what is possible.
Karina Chow, it's been great speaking with you, Chief Operating Officer over at Google Quantum AI, on the back of what has been quite a week for your team. Congratulations. Now, coming up, we get back to Intel's earnings and the chipmakers' efforts at a comeback. From New York, from San Francisco, this is Bloomberg Tech.
Welcome back to Bloomberg Tech. If you're just joining us, Intel and its earnings were our top story. And the stock actually has eliminated most of the gain that it had. It opened up almost 8%, is now up just half a percentage point, but trading at its highest level since April of 2024. It has returned to profitability. It saw surprising demand across PC and server, and it had some fighting talk about its place in the AI infrastructure industry, which largely was around wafer and packaging, not as exciting as GPU. But it's worth digging into the numbers, Cara.
It is, and we can do that with a perfect person. Pierre Ferragu is with us, New Street Research, Head of Global Tech Infrastructure, joining us. And look, we have seen the gains fade. What did you make of the numbers? Was there enough there to keep the share price rallying as it has been?
Yeah, so the numbers for Intel on a day like yesterday are about relatively short to near-term trend. And so the PC market has been very weak for some time, meeting actually expectations that were very high because everybody was very excited about the AI PC and things like that, which didn't really move the needle for the market. And so now what we see is a more traditional driver, like the Windows refresh cycle, helping enterprise demand. And that's great, of course. And then servers, we've seen the server market being weak for quarters and quarters, if not years, because you had so much focus on deploying like AI servers that a lot of very large players were kind of, deprioritizing the deployment of traditional servers. And now we are entering a phase of catch-up. So the near term for Intel looks good, and it reminds you that it's a good business, that there is operating leverage, that even if they've lost a lot of market share to AMD, they are still like a market leader, so that's great. But these are very surprisingly positive, but relatively short term, and that's the way I interpret the stock movement. Big risk on the news flow, and then you look back and you're like, well, but at the end of the day, what does really matter for Intel? Is that really like PC demand over the next couple of years, or is that more like...
So what matters, Pierre? What matters is 14A. What matters is, are they going to be the cutting edge of the next iteration of chips? Are they going to really rival TSMC and get others than Intel's own fabrication going? What did you hear from Lip-Bu Tan and the team about that?
So I heard two things. The first one is mixed signal, which is that 18A, the manufacturing is ramping, is going to get into volumes imminently, like for the beginning of next year. But comments about the yield, so the quality of the process, are still very, very mixed. Let's face it, the yields are not good today. So early yields not being good is almost business as usual. But I think 18A's performance in terms of manufacturing performance is disappointing. And then the second piece of news that really matters the most for the long term of Intel is like more positive comments about 14A. Remember, 3 months ago, the CEO had very cautious comments, even mentioned in writing in the 10K as a possibility of not developing 14A if Intel didn't find enough customer support to do it. And now they're talking positively about 14A on the technical front, like the roadmap is progressing well. And also, I don't even want to call that like the commercial front, but more like the coalition front. This idea that if you really want Intel to be successful in manufacturing, you need more than clients. You need industrial policy. You need a coalition. You need partners that deeply engage with Intel, invest in Intel, commit to Intel to work with Intel. That's the only way the foundry is really going to do well. And honestly, on that front, it's very, very early signals, but I think they are positive.
I tried to get a sense from Intel's CFO, Dave Zinsner, when I spoke to him on the phone about that long term you were talking about. And in an AI world, his answer was quite simple. They do see opportunity in accelerators, but the foundry bit is what I was like most surprised at. He's saying that the foundry opportunity for them in AI is in wafers and packaging. That doesn't sound hugely exciting, Pierre.
Well, maybe it doesn't sound hugely exciting, but it sounds very realistic and really playing to Intel's strengths. The way I see Intel today is they have two major product franchises. One is in the PC business, x86 CPUs for PCs, and one is in server. So I'm pretty sure the management wants to maximize the value of these two franchises and concentrate on them, and it's good. You can't invent yourself, like an AI accelerator designer like 15 years down the line or 10 years down the line, and that's very reasonable. And then yes, Intel has an edge in packaging. Intel is a strategic asset for this industry, and this is probably what management wants to build on. And I see that as maybe not as exciting as we're going to compete against NVIDIA, but very realistic and the right industrial approach, probably.
And for our audience, Pierre, they appreciate that answer because you also cover NVIDIA, right? You're able to make the comparison. On x86, I think the argument Intel were making to us was the hyperscalers have woken up a bit to the value of having the latest CPU in infrastructure. They're willing to invest and refresh on CPU. So again, for them, Intel, they would argue that it's a great opportunity for them. Do you see that opportunity?
Yes, absolutely, no doubt. And it's very, very strong. You have like clients asking for it, the specifics of the x86 architecture, and the way Intel implements it is very differentiated. I've always been a great believer in the quality of the products of Intel on that front, like the ability of an Intel x86 chip to deal with very unforeseen situation in very complex workloads is excellent. And you've had so much demand for it that it actually triggers NVIDIA's move first to open up NVLink, like the high bandwidth connectivity with their GPUs, so that x86 chip can be integrated into NVIDIA systems, and a $5 billion investment in Intel, and a partnership with Intel to co-develop chips that will be optimized to get integrated into NVIDIA systems. And my read, having followed that for a few years, is that it's not just like a nice gesture from NVIDIA under political pressure or anything like that. It is a genuine, thorough, and deep interest for Intel products in the industry for that role. Now, keep things to the scale they are. Out an NVL72 server powered by x86 chips, the x86 chip is going to be single-digit percentage of the cost of the overall server, and the other 90+% will be NVIDIA.
So, Pierre, with NVIDIA's support, and we know the money's yet to come through and that'll settle in the next quarter, will that be enough to see Ohio break ground? Will we see an actual commitment, not just to co-develop, but actually to eventually fabricate on site in the United States, not just relying on TSMC?
It's a great question. You need more than that to have like a final commitment or to claim victory, basically. In order for Intel to successfully manufacture chips in the US, package chips in the US for US clients, you need the money, and major progress made on that front with money from the government, from NVIDIA, from SoftBank, and I'm sure more will follow. You need also like the multi-year commitment of a coalition. So you're not going to get like the right chip in the first go with Intel. It's a dialogue that needs to last multiple years before you get to success. And last but not least, you need execution. You need Intel to come up with a 14A node that is going to show up, like progressively be unveiled and better convince and make potential adopters more confident it's going to be the right node to do something with it.
Pierre Ferragut of New Street Research, great to have you back on Bloomberg Tech. Thank you very much. Now coming up, Mistral CEO Arthur Mensch joins us to discuss the startup's new platform designed to help companies get the most out of AI. It's a big interview. We've been looking forward to this one for some time. Stay with us. This is Bloomberg Tech. Today, European AI startup Mistral announced the release of a new platform to help its enterprise clients make customizable AI tools that are easy to operate throughout their businesses. Delighted to welcome Mistral CEO Arthur Mensch to the program. This is a path to production, right? And the enterprise category between you, Anthropic, OpenAI, it's a fierce battle. I think let's just start by you explaining why you feel this is such a significant milestone for Mistral.
So, hello, and happy to be here. For us, we're a global company really focused on creating value for the enterprises. And we have had 3 years now of experience in doing that. And so AI Studio is basically the one-stop shop platform where you can build your AI application as a business. And so it brings everything that we need to create value in the enterprise, to create applications that belongs to the enterprises, that contains their IP, that is connected to their data, and that improves over time by leveraging the knowledge that is contained within enterprises, that is contained within employees' mind.
You are a global company. You're producing foundational models, Arthur. I wonder, though, how you compete against those that are already serving the enterprise. How is your solution different from that of Anthropic's, that of OpenAI's, that of X's, and many others?
Well, I think our solution is much more integrated in that we have thought about all of the bricks that needed to be there to go from a model, which is how we started, to an application with the right front end, with the right back end, and with the right learning mechanisms. So that integration is really the reason why we've been succeeding in delivering value with enterprises. So that's one very strong area of differentiation. The other thing is that in contrast with some of our competitors, we really believe that enterprises should build their own AI, that they should own the systems, that the IP should remain their own, that the data should remain where it is and should not necessarily flow back to us. And so that approach of building a portable platform that can be deployed on-prem, that can be deployed on private cloud, combined with the vertically integrated approach of having just one platform allowing you to go from prototype to production, I think is very, very different from the approach of our competitors. And that has allowed us to make a lot of progress, in particular in the US.
Arthur, can you talk about how quickly you're able to onboard scaled enterprise customers to this? And in turn, therefore, what the capacity and compute constraints are for you in launching a new product and then trying to run workloads with clients?
Well, a good example that I can give you is what we've been doing with one of our big customers, which is a logistic company called CMA CGM, and one of the biggest shipping company in the world. And so as many other companies, they were a bit struggling with the adoption of AI. If you look at the MIT reports, they state that 95% of use cases just don't go into production. And the way we have done the work with them is we used AI Studio and we deployed our AI applied engineers, our AI applied scientists. We made them work with the business unit owners, and they realized what kind of processes could be automated end to end. And from ideating what we could automate to going into production, so from March to July, in 4 months, we were able to understand a full function to be automated, so cargo release and dispatching of release of containers to multiple customers. We're able to go from that to production that is now going at a global scale. So the way we think about it is that it takes a quarter to go from a prototype to a production. And for it to happen, you need to have the right tools. You need to have the right tools. You need to have the right experts. You need to deeply understand what AI agents can do and cannot do. You need to connect the agents to the data sources. You need to connect them to software, which is sometimes legacy. So you need to have the right interfaces, the right plumbing. That's what AI Studio can bring. You also need to have the experts. So that's why we deploy people in the companies that we work with.
Arthur, there is intense interest in Mistral as the European champion among AI labs, frontier labs. The thing we're most interesting to learn about is the progress of the follow-on fundraising round that's reported you're undertaking. How much money are you seeking to raise? But beyond the money, why do you need to do a quick follow-on? What is the most pressing need for capital at the moment?
So I'm not sure we'll talk to you about the follow-on, but we are not raising money at the moment. We've just actually announced a fundraise with ASML, which is the biggest European company, and with whom we work, with whom we have a commercial agreement, where we help them make better products, automate their processes. We help connect their vertical expertise to our horizontal expertise. We make them create their own AI and deploy this AI into their systems. So that was a 1.7 billion euro raise, which makes us, we've raised around 3 billion euro in total. Yeah. And that in turn has enabled us to grow very fast and to create unique technology and to release it in particular on the open source world.
That was really interesting, this strategic investment coming from ASML. You just referenced CMA CGM, another French-based giant. It's a global company, but it's French-based. You got work with Stellantis, you got work with BNP Paribas. What about US companies? How are you managing to penetrate here?
So we are working with multiple US companies. We're working with Cisco, for instance, which has chosen us because we allow them to deploy on private cloud, and we deploy people to work with them, in particular on the customer experience side. So that's one important customer of ours. We also work with Snowflake, deploy our technology, in particular on document processing and all of our technology to structure unstructured knowledge into to take unstructured knowledge and turn it into things that can then be crawled by AI systems. We also work, as you know, with Microsoft, which is a very important partner of ours and exposes our model on Foundry. Our models being very competitive, in particular on their cost to performance ratio. We work with AWS and GCP, and we work with multiple digital natives companies as well.
Arthur, your peers, Dario Amodei from Anthropic, Sam Altman, OpenAI, are looking increasingly to the Middle East, both for capital, but compute capacity, right? This week, we broke the news of Anthropic securing 1 million TPUs with Google and GCP. That's the scale that people are talking about. Are you making those future plans for scale? Are you looking at debt markets to ensure the future of Mistral and what you want to do?
So the future of artificial intelligence is very linked to infrastructure, as you know. And as a consequence of that, we have created a new business unit called Mistral Compute, which is creating digital infrastructure, GPUs, in particular in Europe, which is lacking infrastructure today. And so we've been growing that very fast, and we are acquiring multiple hundreds of megawatts capacity in the coming year to actually be able to serve our customers, to serve AI startups, to serve all of our existing customers and customers that come to us because they are looking for sovereign capacity. We also use that capacity to train our own models and to maintain our leadership on the open source front.
But with that comes the need to continue to invest. You've raised money, and is that what's being used to finance the exploration and data center build out? Because I'm looking at a headline at the moment that the Bank of England itself is really worried about a so-called AI bubble and some of the debt and the financing that's going on of data centers at the moment. Is that something that gives you pause, Arthur?
Well, we've raised equity, and we are deploying that equity to actually train models. So R&D is financed by our equity. We also have long-term contracts for our compute facilities. And with those long-term contracts, we are able to actually finance them through debt. But that's not, this is bank debt and gives us confidence that we are not overly exposed to debt. There is a lot of investment happening on the infrastructure side today. We're really focused on creating the long-term value that will justify those investments. Because we operate with enterprises, because we go all the way to delivering value for them, to identifying their use cases, to making things that transforming what looks like magic to something that looks like money. We are not exposed to whatever may happen on overly investing on the infrastructure side. We invest on the infrastructure side in a wise way.
To help build Mistral AI Studio, Arthur Mensch, great to have you on that news today. Thank you so much, the CEO of Mistral and co-founder. Now coming up, we'll come back on the AWS shortage and outage, but it's one of the biggest in history, remember? And what could that mean for cloud giants' future in the age of AI? This is Bloomberg Tech.
Amazon basically invented the cloud business, but now it's struggling. As Monday's outage shows, one of the worst outages in the cloud unit's history. Bloomberg's Amazon reporter Matt Day joins us to discuss his latest deep dive and why AWS is now perceived as trailing its rivals in AI. This week's been rough. Outage, losing some ground to GPUs, TPUs with Google. Just give me the headline of your story.
So the headline of the story is that Amazon is essentially no longer the only game in town in cloud computing. They've got real credible rivals, down to Oracle and Google. 5 years or so ago, it was only Microsoft that was knocking on the door. And then now you add on all this AI workloads, and that's not a business that Amazon rather seem to be leading in.
Just for context, though, how successful does it remain? How much market share does it still own? And what are we starting to see in terms of inroads?
So on traditional cloud, it's something like 38%, reckons Gartner. That's down from about half of the market, 5 or 6 years ago. Folks who have made inroads, there's Microsoft, there's GCP, there's Oracle, and a lot of the threat there is just some of the services that Amazon pioneered. Like those are leaning toward commodities. Other companies can offer you a similar package of goods.
Right. Matt, when we broke the story about Anthropic using TPUs, Google stock up, Amazon stock down. How have you reflected on that in the story?
Also, you really can't overstate the importance of Anthropic to AWS. They're their marquee artificial intelligence customer. They're helping kind of co-develop Amazon's artificial intelligence chip called Trainium with them. So the fact that they now have, what really looks like a hedge or an option to go more toward Google, should they choose, should they like the tech results better, that is a real risk, or potential risk rather, for Amazon's AI business.
I have a feeling it's a story you're going to continue to dig into. It's so well read today. Thank you so much, Bloomberg's Matt Day, reflecting on the week that was for Amazon. And we reflect on the show that was, because it does it for this edition of Bloomberg Tech. Ed, it was another huge, busy one. And boy, next week, full on earnings.
Yeah, we didn't even get to mention really in the course of today, but next week is the tech Super Bowl, right? In an earnings context, it's the biggest one. It's going to matter.
Well, is NVIDIA there? I guess not. We've got everyone else. Meta, Microsoft, Amazon, you name it. The vindication, the fundamentals. They've got a lot to check out on the podcast.
I am heading to DC for GTC with NVIDIA, so there might be some news there. Check out the pod. You know where to find it. This is Bloomberg Tech.